What is up, freaks? Welcome back to Tales from the Crypt. It's your boy Marty Bent here for take 2 of this week's Rabbit Hole recap. Had a brain fart there. Forgot to hit record on our first take, and it was a great rip, Matt. I'm sorry. From the bottom of my heart, I feel terrible for wasting 35 minutes of your time this morning.
The freaks will never know how good of an episode they just missed.
The lost tapes. I did hit record this time. Triple, quadruple checking. We're 29 seconds in, recording on both the conferencing tool that we're using and my local recording tool here.
We have 3 different recorders going right now, so
yeah, there's
we
no
should
way
be set.
This will make it into the annals of history. Speaking of the annals of history, Bitcoin at 9,400, which it was when we first recorded. It's now at $9,500. $8.01. $8.81 according to the trade block XBX index. Do you have a block for us, Matt?
Bullish. Most recent block is 592,305.
Bang bang. Yeah, we have to keep this tight this week. I'm in a bit of a rush as I have a wedding in Philadelphia that I have to go attend later this afternoon and then tomorrow. So we got to keep it tight here.
Not to mention it's the second time, so now it's got to be really tight.
Yeah, but we'll make it fun. Again, Matt, I'm sorry. That was a Bush League move on my part there.
No worries, shit happens, but this is an example of something Bitcoin doesn't fix.
Yeah,
so
Bitcoin doesn't fix
noted.
this. And maybe, as some people pointed out, we do need a multi-sig record function here.
Absolutely. That would have fixed this.
Yeah. Even though Bitcoin doesn't fix this, Bitcoin does fix other things, and you can buy Bitcoin via the Cash App. This episode of Rabbit Hole Recap is brought to you by the Cash App. If you freaks live in America and you've not downloaded the Cash App yet, and you listen to this podcast, what the hell are you waiting for? Go download it. We got a special deal for you. Use the code STACKINGSATS. That's one word, STACKINGSATS. STACKINGSATS, one word. You're going to get $5. $5 is going to go to Owls Lacrosse, charity very near and dear to our hearts here. They're helping out boys and girls in Chicago learn leadership skills through the sport of lacrosse, a sport that I am fond of, the best sport on 2 feet, the fastest sport on 2 feet. The Cash App, once you have it downloaded, you're going to be able to buy and sell Bitcoin through that. You're going to be able to stack sats, and then you're also going to be able to withdraw. You can withdraw to Wasabi, withdraw to your personal wallet, and then you can also send from a personal wallet to the Cash App if you just so happen to need to dump some sats. Unfortunate if you do. And on top of that, they have their Boost program. Can't forget about that. Go to merchants like Chick-fil-A, Whole Foods, local coffee shops, save money while you shop using the Boost card. Download the Cash App today. Use the code STACKINGSATS. And then we got to give a shout out to our friends at Unchained Capital, doing incredible things. Go to www.unchained-capital.com/vaults to check out their 2 of 3 multi-sig vault product, which allows you to use multiple hardware wallets, whether it be a Trezor, a Ledger. I believe they're working on Cold Card. And you can engage in a 2 or 3 multi-sig with them, where they can be that second of that 2 or 3 scheme if you ever are in a pinch. And then on top of that, they have their loan product as well on the other side. If you don't want to sell your Bitcoin, you want to lever up and take a USD loan, you can do that as well. Go to www.unchained-capital.com/vaults. Check out the Vault program. Matt, we're about to run through the cycle again. Are you ready for round 2?
We have a couple extra topics, so the freaks get that benefit.
Is there anything that you said in the first go-around that you were like, I should have said that? Or anything that you didn't say?
Yeah, but there's been a couple. But because we didn't record, there hasn't been as much as usual, I think. You know, it only clicks after we publish.
After you know it's going to hit the airwaves.
Yeah, no doubt.
So we're going to start out with the cold card. MK3 was announced. This is very prescient news considering the interview that we dropped on Tuesday with Rodolfo Novak, who is the founder of Cold Card. Matt, what are your thoughts on this?
Cold Card Mark III, right? Isn't that what we say, Mark? Right? And what did you say, MK? What the fuck's going on?
MK3.
Okay, I don't know. Anyway, the Cold Card Mark III, the newest Cold Card. Rodolfo keeps iterating. I ribbed him on Twitter that the true environmental cost of Bitcoin will be all the cold cards I purchase, destroy, and replace. It's fucking awesome. He keeps proving himself, keeps iterating and dropping new products. Make sure you do listen to our episode that we dropped with Rodolfo. I think that was a particularly great episode. Really enjoyed meeting him. He's just such a great dude, so smart, so just a fucking hustler. And also, like, it's very complimentary to Stefan's episode with him. I listened to Stefan's episode as well. It's a very good episode, but we cover a lot of different things. So you should definitely make sure to listen to both of those, and then FOMO buy some cold cards.
Yeah, and this particular update is pretty cool. It will brick if somebody has 13 failed PIN attempts, so make sure you don't forget your PIN. And if somebody is trying to get into your cold card and they fuck it up 13 times, it's going to brick that, so make sure you take care of your backup as well. Then it also helps harden the cold card against some side channel attacks as well, so make sure you're updating. And yeah, like Matt said, like we were giving a demo on the Mark III in a few weeks here, and it feels like we're already behind schedule.
No, we're giving a demo on the Mark II.
Yeah, the Mark II, yes.
I just ordered 36. I just ordered 36 cold card Mark IIs, and this motherfucker announces it right afterwards. But no, it's great. It's great. We got a great discount for the people who are coming. Hopefully, it'll be the first of many. Rodolfo is really good about that. He is also offering a discount if you pre-order the Mark III now. I think it's a $20 discount, and you get additional 5% off if you use the code TFTC. So that's awesome. And then the other thing, of course, is that our first walkthrough video of hopefully many, I've kind of been slacking off, so I apologize for that. Now that I have my manicure, I can come out with more videos. Is up on our YouTube channel, so you can see how to use the cold card, the full initialization process of the cold card with Wasabi Wallet, without connecting it to your computer, using the SD card to shuttle transactions back and forth.
Yeah, shout out to Rodolfo again. Rodolfo, it was incredible to meet him in Dallas. Fucking what a don. Dude is just putting the team on his back, building dope hardware, solid Bitcoiner, true man, fucking legend.
I think I have 9 cold cards now. Oh no, I have 10 because I have another one coming with the workshop. And so I'm like saying to myself, like maybe I'll wait for the Mark IV, but what do I do? I don't know. So we'll see. But I'll actually probably after we finish recording, I'm gonna order 3 more.
Are you gonna have more domain names or cold cards by the end of your hoarding?
That was a topic we forgot to bring up last time. Stefan fucking encouraged my addiction, and I bought 2 more domain names. Tales from the Citadels. So look forward to our pivot once we start building our citadels. We will rename the pod to Tales from the Citadels. Yeah, as we should
become more positive. I'm very happy to be able to rehash this because this is just pretty dope. This dude on Twitter, his handle is FiatJF. He's the creator of the LNTX bot on Telegram, which allows you to basically create a Lightning wallet on your Telegram app and then interact with the apps. So that's the way I send messages to the satellite app. You hit /app satellite 50 and then your message, and you're just able to send a message to space. The same creator came out with a new Lightning Network block explorer. Or how would you describe it, Matt? You're the one who found this.
Did you drop his name at FiatJF?
Yes, I did.
Okay, sorry, I zoned out a little bit. Yeah, it's a Lightning Block Explorer. Well, it's a Lightning Explorer, not a Block Explorer.
Yeah.
There's no blocks.
Yeah. Explorer.
My main use, the main Explorer I've been using up until this point was 1ml.com, which is also pretty useful. But I just really, really like this Explorer, so I thought it was important to mention it here. The way it shows a lot of the statistics is a lot different. It's very intuitive. It's very clean. Keep in mind that this isn't showing private channels, and none of the Explorers show private channels and stats from those. So they're a lot of the new nodes that are being launched with private channels, and they aren't being shown in any of the Explorers.
Yeah, I'm just going through it right now. It's very aesthetically pleasing, really cool stats, sick layout. Again, shout out to @FiatJF, JF, correct?
Yeah, at FiatJF, and yeah, I put his name in the show notes. So
Yeah,
it's
building
there.
building dope shit. Again, the LNTX bot. If you are on Telegram and haven't checked that out, all you need to do is follow it, and then it gives you instructions on how to fund a wallet. You fund a wallet on Telegram, and then you're just interacting with apps outside of Telegram, and it's fucking fascinating.
I love the Telegram bot, but like you really need to try and send a sat node transmission through the website, a Blockstream's website. Just Google Blockstream satellite transmission. It's actually very, very intuitive to do it through their website.
I know, but this FiatJF made it so fucking easy through Telegram that
Yeah, but I realize that you're overpaying by like because it doesn't tell you how much your bid price should be.
it's true.
So you've been like paying like 40 more sats than you're supposed to pay. Like you're wasting sats.
All right. Maybe this will be the impetus that drives me to the website. You got me there.
I mean, don't worry. It's like 40 cents is 40 sats is like a half a cent. So right now, but who knows? Like in the future, it could be a lot more than that. So
yeah, it could be $40 one day. You never know.
We're not implying sat dollar parity. That is.
Next topic, Justin Moon, good friend Justin Moon, dropped some new UI for hardware wallet multisig using Bitcoin Core and HWI, and he released the testing for that on GitHub and is looking for help testing that out. Matt, you have any more color on this?
Have you looked at the screenshots yet?
I have not. I don't think so.
It's badass. Look at the screenshots. Anyway, so up until this point, everyone knows that multisig. The agreement is that multisig is a significant improvement. All these hardware wallets have their own trade-offs that they choose to take. So if you mix multiple hardware wallets together, for instance, like a 2 of 3 setup with a Trezor, a Ledger, and a cold card, then you have to compromise 2 of the hardware wallets with different trade-offs to access the funds. The issue with that is that it has been very difficult to set up with your own full node to begin with. Currently, like you basically have to run Bitcoin Core, you have to run Electrum, and you have to run Electrum Personal Server or something like Electris or ElectrumX. It's a convoluted process. It's not a simple process, and the UI isn't very clean. So what Justin did here is he put a nice clean UI on top of Bitcoin Core, so you just run it alongside Bitcoin Core. You don't need any other software on top of that, and you can use any hardware, at least the top 3 hardware wallets. I don't know why you'd use any others anyway. To create multi-sig receive addresses and to construct transactions and broadcast them. Currently, it is under testing. I think he released it this morning or last night. Whenever he released it, I got super excited. I think it was last night.
Yeah.
But please go to the link that we put in the show notes and help him test it and help submit pull requests with complaints and stuff like that.
Yeah, for those of you who cannot wait to see the show notes, it's github.com/JustinMoon/Junction. And we got an alarm going off in the background here. I'm on a back porch.
It's happy noon.
Happy noon. Where can we find those screenshots you're talking about? They're not on the GitHub page. I'm not seeing
We can officially start drinking. I put it. He tweeted them out.
Okay. Yeah. So we'll include those tweets as well.
Yeah, I guess he didn't put screenshots in the GitHub, but anyway, it's just a very clean, simple interface. It's exactly what we want. It should make multi-sig way easier for someone to use, and the beauty of it is that by design, it's using your full node. So that's fucking badass. So good job, Justin. Keep hustling, and I look forward to testing it. I have yet to test it. Yeah, I just checked. He released it last night, but I have yet to test it.
Yeah. Huge shout out to Justin. Another pump of a previous episode. If you guys have not gone and listened to our episode with Justin Moon, go check it out. I forget the particular number, but it was an incredible 3-hour conversation. And we are planning to have a catch-up episode with Justin soon, so be on the lookout for that as well. And again, another huge shout-out to him putting the team on his back, teaching Bitcoin devs, and now making multi-sig easier for people running Bitcoin Core. Next topic, Bitcoin, realized cap, all-time high, 100 billion, nice big round number. It's cool to see. Bitcoin previously had, when was the last realized cap all-time high?
Okay, so first of all, realized cap is a metric that Coinmetrics has pioneered. And basically, it's different from, you have the traditional market cap, which is just the current price times total outstanding coins. But that doesn't really account for lost coins. It doesn't account for when people purchased. So what realized cap does is it weighs each Bitcoin, each UTXO on the blockchain by when it last moved, the price of when it last moved. That's why it's always important to mix your coins when the price is going up, so that you can pump the realized cap value. But anyway, right now we have a realized cap for Bitcoin of $100 billion. But meanwhile, Ethereum's realized cap is down from its peak. It's at $27 billion. Its peak was January 2018. So that's almost 2 years now since the last peak, which is interesting.
More potential upside, bro.
Yeah, I had a couple of ETH heads.
It's a buy.
A couple of ETH heads tell me that it was underpriced. It's proof that it's underpriced. But if you use that logic, then then maybe like the real value price is Ripple or some bullshit like that. What's interesting here is a lot of people, they judge Bitcoin's success based on its former all-time high price. In this case, what was it? It was like a little under 20K. But we were barely there. That was we were there for a couple days. The whole thing, with the whole run from like 10K to 20K and back down was like a couple weeks max. So it's, not many people bought up there. Realized cap does seem like a much better metric. Some of the ETH heads said that they don't believe in made up metrics. I would contend that every metric has to be created somewhere first. And if you use every other fucking metric, Bitcoin is also outperforming ETH, including, hash rate, including price, including regular market cap. So yeah.
Yeah. The hash rate in particular is fascinating to me. And then the realized cap too, not being anywhere, it being half of what it was in January of 2018 is fascinating.
Yeah, I mean, Bitcoin is hitting new all-time highs with hash rate. But meanwhile, ETH is I think at half of what their top was, or, just significantly lower than what their top was. And what's the reasoning for that? The reasoning for that is that they continue to neglect miners, and that, miners are running businesses and they want to have predictable money flows. But meanwhile, they keep saying they're going to integrate proof of stake. They keep saying that they're going to fork out miners. They keep saying that we're going to change the algo, so if miners have ASICs or something like that, we're going to brick them. If you say these things, people aren't going to invest in securing your network, and this is going to be the end result.
Yeah, the market's sort of speaking there, saying, "Hey, we're not going to go along with this." It's be aware, especially if you're working on a competing cryptocurrency. Next up, chain analysis. They recently did a study on dark markets and coin joins, and they came out and said that they believe that less than 11% of Bitcoins that have been mixed in coin joins are being used for illicit purposes, which is a very positive comment. You can read it as positive because it shows that most people in Chain Analysis Mind, which is a company that works to make sure they can track everybody through the blockchain, they're saying that most people are just using coin joins for privacy, which is great to see. And it should be a nod towards privacy is okay, and people want it. People obviously want it. And what are the exact stats on people sending from exchanges to coin joins?
First of all, so Chain Analysis' whole business is that they're selling this Bitcoin tracking to exchanges and stuff to try and block so-called illicit activity so that they can comply with local regulations. So their incentive is to overstate what this number is. So for them to say that it's less than 11% is fucking huge, because their incentive is to have that number be way higher than it really is. The overwhelming majority of people that are mixing coins are clearly doing it to protect their privacy. One of the interesting, and not commit crimes. Privacy isn't illegal. The majority of coins that are going into either Wasabi, Samurai, or these centralized mixers are from exchanges, which is exactly what we've been advocating, which is, if you go to a KYC exchange, if you go to a KYC broker like Cash App or something and you withdraw, you don't want all your future and past transactions to be linked, so you put them into a mixer. They're at 40%. 40% of all coins that are being mixed right now are coming from an exchange.
Damn, that's crazy.
And one of the interesting things to note here is that people are like, oh, well, how do they know these stats if they're being mixed? It's trivial to see that coins are being mixed. You can see them going to and from the process. The harder part, the more difficult part, is tracking them through the process. Now, chain analysis says that if you mix, it breaks their ability to track. I would, put on your tinfoil hat, as Rodolfo said, put on your tinfoil underwear, go into your Faraday tent, and be as paranoid as possible, because I would not trust them for a million years for them saying that they can't track it. That's exactly what they would say if they wanted people to, be at ease and think that they're not being tracked.
Yeah, so just be a little skeptical of that and be aware. But if they are being forthright with this information, it's fascinating. Like, I actually sent from Cash App to Wasabi last week, and it felt good. And it's don't be afraid to do it. And chain analysis coming out and proving that privacy is what is the use case that most people are using these coin joins for, not illicit purposes, which is incredible.
Yeah, I mean, usually my flow is when I stack sats on Cash App, I then withdraw to like Green Address or Samurai, and then when it hits a certain threshold, then I will send it into mixing. So that way you never have too much like on Cash App at any given time. Because remember, not your keys, not your coins. Your account could be frozen at any moment. You never know. So you always want to take custody.
Yep. And it's a great learning experience too. And as Matt has said in the past, it makes you a little less nervous when you're sending transactions. You get more comfortable with it. Next topic, one that I would piss we're talking about, but after Matt's explanation in take one, sort of is pretty important to bring up, or a good topic to bring up. I don't want to say important. The Craig Wright saga is, I don't know if it's coming to an end, but it's a very exciting part of this saga happened this week, where the civil case that was brought against him by Dave Kleinman's estate, the judge in the preliminary, I believe, like evidence proceedings, basically came out and said that Craig Wright is a bullshitter, fabricated a lot of the evidence, and ordered him to pay 50% of his Bitcoin to Kleinman's estate, but he doesn't own it. That's what we've learned from the last couple of years, is that he can't prove that he owns it, and he doesn't have control of those keys. So the judge is just semantics. That's what the case is about. So the judge, assuming that he has coins because he said he does, is now ordering him to give him the Kleinman's estate after fabricating a bunch of evidence.
Yeah, I mean, I think I'm fucking sick of talking about Craig too, but the important reason to bring this up is because it's already turning into a bit of a FUD line. This is like the type of thing that you might see, like your aunt like sees it in the news and like brings it up to, oh, I heard Satoshi has to give 50% of his coins. So this is a civil case. Craig's argument this whole time for why he's been Satoshi is that he was in partnership with David Kleinman of Florida, who passed away. So his estate sued Craig and was like, well, then we want half the coins. And the judge was basically like, everything you've submitted to me is fraudulent. Like pretty much everything. You just keep lying. If you do have these coins, you owe 50% of them. But, as Marty stated earlier, he is very, very, very unlikely that he has any amount of Bitcoin, because he'd be just using, if he could tank the price of Bitcoin, or if he could pump the price of Bitcoin SV, like you damn well bet he would have already done it. And he's just fucking full of shit. And I think it's important to note here that there was a lot of influential people that both directly and indirectly supported him, all the way up until a couple months ago. Some of them, they're awfully quiet now. Some of them have even, like grandstanded about like, oh, I'm done talking about it. It's so obvious he's a fraud. Like, we see you. We know who you are. Like, you go fuck yourself.
People don't forget. The internet doesn't forget, and God damn it, Matt Odell never forgets. Never forget that. So this saga, it seems, I don't know if it's coming to an end, but definitely a blow to the credibility of Craig Wright if it wasn't destroyed already, which I think it was a long time ago. But some people need more closure. This is adding to that closure.
No, I mean the bag holders, the Bitcoin SV bag holders will keep up making new excuses. They had this like tulip trust bullshit, which I think the judge also said was bullshit. And that's supposed to come up in January 2020. So when January 2020 comes around, they'll come up with some other excuse. And, as is tradition, it is what it is.
Yeah. God bless those poor souls getting stuck in that terrible, terrible cycle of believing this dude. Next topic, not more optimistic topic, but a better topic in my opinion, are a good friend of the podcast, a fellow beefy Bitcoin boy, Chain Code Labs resident and phenomenal DJ, James O Byrne, came out with an incredible piece describing the current state of the U.S. financial system, particularly explaining why the stock market is at all-time highs. It's mainly being driven by stock buybacks, which are enabled by easy money. So large corporations will take advantage of low interest rates, take out some loans, and then initiate stock buybacks in which they take stock off the market, off the public market, and basically burn it. It's like a coin burn, and that drives their earnings per share up. So it looks like they're more profitable than they are. And again, James points out that buybacks have been a large reason that the stock prices have increased recently. A lot of flows via buybacks have happened. Then on top of that, he dives into the pension situation in America too, which is looking pretty dire, as a lot of the big pension funds, I don't think he named them by name in the article, but two that come to the top of my mind are CalPERS and Illinois State Pension Fund, and actually a third would be Jersey State Pension Fund. I believe those three in particular are pretty dire. And so these funds that are holding all the public pensioners' money and trying to invest it in the stock market, they have targets of like 7.5% usually, and they're not coming anywhere near that. And so there's vast, basically, the valleys between what they owe people and what they actually have and what they're making in the stock market. So it seems to be a very fickle situation in the U.S., and James does an incredible job of laying it out in layman's terms and being concise. And while he's doing that, he's also explaining why Bitcoin may be a perfect hedge in this scenario, why we may desperately need it because our system is so fucked up.
Yeah, I mean, 3 points. First of all, is James is like the Bitcoiner's Bitcoiner. He's just such a great dude. His brother's awesome too, and he's smart. He's a talented developer. He's a good writer. He understands his economics. He's a DJ. It's just so props to James. You can follow him on Twitter at JamesOB. The other two things is he really missed an opportunity in the title. He called it Bitcoin for safety. It really should be Sats for safety, James. Just saying, Sats the standard. And then third thing, I thought was a really interesting point that he made, and I think a lot of us agree with it here, is that, I think we can all agree that our system is fucked. Our current financial system is fucked. We hope Bitcoin is our safe haven, is our solution to that. It is yet to be seen if that will be the case. But one thing is for sure, and is that all of this is unprecedented, and it's just it's really hard to see it ending cleanly or in a very good way at all. And I think that's a good framing here. It's that we are fucked, but Bitcoin gives us hope.
Yeah, yeah, cause for us optimism, something we can rally around, and a cause for hope at the end of the day. And this, like I said in the first take, this James's piece, I think it pairs well with a couple of things. One being the website that Heavily Armored Clown, who's the host of the
Bitcoin Echo Chamber.
Yeah, the Bitcoin Echo Chamber podcast. He shared this website, What the Hell Happened in 1971 or something like that. I forget the exact name. We'll put it in the show notes. But 1971 is when we went off the gold standard, and you look at the charts, specifically like GDP per capita, productivity, and like wage growth, and they just start like deviating from each other pretty drastically after we went off the gold standard in 1971. And then something in 1973 that you brought up, Matt. What was that?
They started the electronic voting in Congress, so that all their votes were recorded by name and cataloged, so that they were a lot easier to buy off. Corruption became a lot more, because if you gave someone money, you could tell to make sure they voted properly.
Yeah. Yeah. So
it's interesting.
Yeah. That pairs well with James's piece, and I think is sort of a proof that, hey, maybe going off a hard money or a somewhat asset-backed monetary system has created these distortions in the economy and has led to the crazy things that James pointed out in his paper, specifically the stock market and pensions, and then also, which I forgot to mention earlier that James mentioned, was the amount of negative yielding debt throughout the world, which is hitting crazy levels. And if you look at all the European yield curves, they're all basically negative right now, and it's pretty crazy what's going on out there in the terms of the monetary system. And then another thing to pair with that was something I wrote about in the Bend today. Our friend Janie, who's notoriously fighting for to get back to a world where we have grazing cattle and we're back to like the pastoral type world. She shared something that was shared with me this morning in a chat. Basically, a year and a half ago, she shared information about basically financial planning from 2000 BC. So, and pointed out that people used hard assets like livestock and silver to financially plan, and they would use livestock herds to sort of represent initial investments and try to plot the growth over time. So it's crazy. We have people in 2000 BC, 4,000 years ago, thinking about financial planning with hard assets and doing financial projections and stuff like that. It's crazy. And then another thing that was brought to my attention, you fast forward a couple thousand years in ancient Rome, like we've talked about it a lot on this podcast, there's always like signs throughout history of people like warning about money and stuff, and this stuff has to do with using livestock as a hard asset too, but it also brings in money lending. And this is a quote from Cato the Elder. And when the elder Cato was asked what he thought was the most profitable way of utilizing one's resources, he replied, "Grazing livestock successfully." What is second to that? Grazing livestock fairly successfully. What third? Grazing livestock unsuccessfully. What fourth? Raising crops. When his questioner asked, "What about money lending?" Cato replied, "What about murder?" So somebody from ancient Rome understanding the importance of raising hard assets or accruing hard assets in livestock, and analogizing money printing or money lending to murder, which is pretty interesting. And then you fast forward a couple thousand more years or 1,500 more years, and you have people like Andrew Jackson and Thomas Jefferson warning us, like, just take care of the money. Don't make sure that like banks don't have control of the money. And these little lessons are spattered throughout history, and I think it's just important to bring them to the forefront, especially when you take James's article into consideration, how fucked up everything is, and maybe we should look back into history and take some advice from our ancestors.
Sats are my safe haven.
You've been holding your breath to say that for like 5 minutes. I just went on a long spiel there.
I don't like preparation. There was too, like, because we did the previous episode, there's like way too much preparation for this episode so far. But the good news is we have one more topic before we enter our 3 new topics. So then we get some fresh. I'm pretty excited. So let's nail out. So Binance just recently added interest-bearing accounts, aka money lending, which I guess was just compared to murder. So that's probably pretty bad. But I thought it was interesting because, we've been covering Binance adding staking support for all of these different networks, all these proof of stake networks. And I think that's naturally centralizing because these exchanges, they want you to keep money on their platform. It's more likely for you to trade. They get to collect fees in between. And this is another way to encourage people to keep money on their platform. It is worth noting here because it got a lot of press. It was in Bloomberg. It was covered in Bloomberg. So, not your keys, not your coins, people. Just remember that this is high risk. They're loaning the people who are borrowing, like they're then lending out your crypto. It's not Bitcoin, by the way. It's only Binance Coin, Ethereum Classic, and Tether so far. But the people they're loaning the coins to, and this is similar to the other services that are offered out there for Bitcoin, is they're loaning them to short sellers mostly. Like that's who wants to borrow the coins. So if we have like a Bitcoin Tina situation here, which is like core to my investment thesis as well, is that at any moment Bitcoin is so illiquid that the price could go up and significantly, and that's even more the case with these even more illiquid altcoins. Like they could end up in a position here where they're short and they can't pay you back. And then you also have all the additional risks that exchanges have, which is they could get hacked. They're a prime target for hacks. They're a prime target for inside jobs, government, regulation and enforcement, and then just a good old fashioned exit scam. And that exit scam could even be in the form of like a KYC exit scam where they like force their users to do KYC to remove their funds, and they've been known to do that. So just be aware.
Be aware, freaks, of the layered systemic risks that something like this creates. It's very interconnected and very concentrated risk, is what a lot of portfolio managers would say. Next,
the other thing there is that ETC. Everyone's probably wondering why ETC is included there. It's because it had a recent run up in price, so they probably have a lot of demand on the short side for people to want to go margin short. So that's why they included it there. And BNB is the other interesting one to note because, that's their own quasi security token. So now they want people to. It's just like another method to try and pump the price of their own token, and it creates It creates even more questions because they're issuing the token. They're the ones reporting the revenue. You're trusting them reporting the revenue, and now they're going to be custodying a large amount of it. And loaning it out to short sellers. I don't know. It's interesting.
Yeah, it is very interesting. DeFi, #DeFi.
By interesting, I mean it's all going to blow up at some point. And when it does blow up, I'm going to say "told you so." And I'm going to feel bad about it, but I'm still going to say it.
Yeah. It's not going to be Schadenfreude. It's going to be a somber "I told you so." But yeah, one day "I told you so" will come. Next topic. Didn't see this. OpenNode adds KYC and Shopify integration. Is it KYC only if you integrate with Shopify?
Well, first they added KYC, then they added Shopify integration. So I just put it into one topic line. So like a couple days ago, they added KYC. Not great. It's for the merchants. It's not for like if you shop at an OpenNode merchant that you have to provide KYC. Just the merchant has to provide KYC. This is to be expected, I think. Like this is what centralized companies have to do to comply with money laundering regulations. What was good about it, and this is why it's important that BTC Pay exists, the BTC Pay server, because it isn't a company that you can run your own node, you could do it yourself, and you don't have that same pressure. What's good here to highlight is that OpenNode didn't pull the KYC exit scan kind of thing. You had all current merchants had the opportunity to remove their funds, not complete KYC. But going forward, all merchants will have to do full KYC.
So just be aware. Be aware if you're using OpenNode and you're worried about sharing KYC if you're a merchant. May not be a big deal to you, but just be aware. This next topic is
wait 1 sec. If KYC is a big deal to you, then you could use BTC Pay server.
Yeah.
It's very easy to do. Check it out. Their team's great. But the Shopify integration is a big deal. No one spends Bitcoin, but I think Shopify runs the majority of online stores now. So if you run one of those, it's like a couple clicks and you can start accepting Bitcoin and Lightning. So there you go.
And it was actually don't want to piggyback off OpenNode here, but we did open source our Shopify BTC Pay integration. It's a little workaround, but if you go find DJ Seed's GitHub, I believe he has that code available of how to integrate your Shopify store with Bitcoin. It's a little bit of a bad UX process at the checkout, and like the Bitcoin's hard to find. The Bitcoin payment method's hard to find, but it is available and it is possible with BTC Pay Server as well. So I'll try to find a link to that as well. I'll hit DJ up for that. Next topic is very fascinating. Just brought to my attention by Matt, but pretty interesting observation by HODLNOT on yesterday's dump of Bitcoin. Yeah, so Bitcoin dumped, like 5% yesterday out of nowhere. Not out of nowhere. We've just been in a very strong consolidation move. It's been pretty boring for the last week or two. But EOS dumped super hard before Bitcoin even moved, and then ETH, Litecoin, and other alts followed suit shortly after before the big Bitcoin dump. So that would signal to me, if I'm looking like that, as that's people with big altcoin bags just exiting the market and just being totally fed up and selling their Bitcoin too after dumping their altcoins. Is that a fair assessment, Matt?
I don't know what to take from it. I just thought it was an interesting point that HODLNOT made, and I saw it after we stopped recording. So I threw it in there. Yeah, you can read it however you want, but it does show, like diversifying in this space is a crock of shit. You're just adding risk on top. But yeah, I just thought it was interesting that it dumped 20 minutes before, and then Bitcoin we had one of our classic beautiful capitulation wicks or whatever, where you have like a 5% drop in like 5 minutes. We went from like 10.2 to like 95, like fucking right away. But if you're doing it right and you're just staying humble, you're stacking sats, like it doesn't matter. It's just all noise.
Yeah.
In my opinion.
Yeah. Find your Bitcoin Zen freaks. Join us. Find safety in sats. And just chill. Matt, I can't apologize enough. I'm sorry for wasting your time this morning.
We have one more thing to talk about.
Oh, we did?
Did you see this?
Oh, the Portugal tax exemption? My bad.
Yeah. I'm not sure if this is fake news or not, but a lot of people are talking about it and like hyping it up on Twitter. So like I figured we'd bring it up this time. Like I actually, like when we finished recording, I walked out and I told my lady that the recording didn't work. And she's like, well, at least we can move to Portugal. And I was like, babe, that might be fake news. So now I added it on to the podcast.
We're not trying to peddle fake news here, Matt.
Yeah, I mean, I'm not sure if it's real or not. I'm not sure if it's, some people are saying, I don't speak Portuguese. So we have to wait to see. But some people are saying it's just VAT tax. Some people are saying like you don't have to pay capital gains. But I think regardless, like this is the type of thing that we're going to start seeing happening as Bitcoin becomes more successful because countries are going to, and, after our last conversation that is going to come up soon with Eric Voskuil, I've been thinking a lot about game theory, and I do think that the game theory here is that these different countries are going to start trying to court Bitcoiners to come and start businesses and buy houses and do all that jazz to spur their local economies by giving them favorable tax treatment.
Yeah, so if any of you Portuguese freaks out there have better information on this, definitely tweet at us, let us know, DM us if you don't want to be public. We're interested, we want to learn. And Matt alluded to it, but yeah, we did have an incredible conversation with Eric Voskuil earlier this week. That'll be out in a couple weeks, I believe. Great dude.
That was an episode where when I got off, I was just like, my mind was just right. There was a million different things that I wish I had talked about. And we continued talking to him afterwards too. It was great. It was great to meet him.
Yeah. Very interesting Bitcoiner. I love his perspective. Yeah, that's it. So now I officially get to apologize to you for the third time now. I'm sorry.
I like apologies. Apologies are great. More people in this space should do them. I'm surprised we don't have more lost tapes. So there's that, and I'm glad that we got a couple more topics that we got to add on there. And just stay humble, stack sats, and I look forward to next week.
Yeah, we'll see you in person next week, and maybe we'll have that multi-sig record button figured out by then.
There you go. And then we'll be able to play around with Justin Moon's dope new tool.
Yeah. Yeah. Go make sure you guys subscribe on any platform you're listening to this to. You're listening to this on. I can't speak right now. Check out our YouTube channel. Reviews go a long way if you can review. Check out the website, tftc.io. If you want to get a shout out on here, you can go to the contribute page. Yeah, we got big plans. 2019 is rolling on.
But I just saw Udi's tweet, and I just wanted to bring it up. He said, "Sell your ETH if you're having trouble falling asleep."
It's
a good way to end it.
Yeah, yeah, it's a good advice. Good advice. I've given it out many times actually. Yeah, sleep's important. Sell your ETH.
Take care, freaks.
Peace and love.